Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market update. Today, the net asset of my account right now is 62,976.24. Today, Apple has closed it up 1.36, 0.53%. As a rebound from the drop earlier this week, SQQQ closed down 0.19%, SPY closed down 0.19%, and United Natural Gas also closed down. So today, let's take a look at the market performance overall. Dow Jones closed down 0.77%, Nasdaq closed up 0.16%, and S&P 500 closed down 0.14%. Today, the industries generally closed lower, and the affected industries including the financials and asset management. On the other hand, the technology stocks continued to outperform the markets, and let's take a look at the recap for this week's market as a whole. This week, Nasdaq recorded a new high, historical highs, and all three major indexes recorded gains this week. Overall, Nasdaq hit another record high. The Dow fell by more than 300 points, while component Nike closed down 7%. All three major indexes posted gains for the week. Markets continue to focus on U.S. inflation and the outlook for the Fed rate cuts. Overall, the Nike's loss partially dragged down Dow Jones's performance. It closed down 7% due to a slowdown in the profits, making for the Q3 of 2024. Right now, it is down a net profit of $1.172 billion in Q3, a gross margin of 44%, while missing analysts' expectation. The company lowered its revenue guidance for the first half of fiscal 2025 to the low single digits, reflecting a weak global macro outlook. In terms of the economic data front, Treasuries rose for a fourth straight day, sending the 10-year yield down nearly 10 basis points since Monday. All three major U.S. indexes rose for the week. The Dow rose 1.96%, Nasdaq rose 2.85%, and S&P 500 rose 2.23%. Further, Fed officials have released that currently, investors' optimism for the FOMC is that people are still expecting it to cut interest rates at least 3 times this year, even after the hot inflation reports, due to the Fed President Jerome Powell's speech on earlier this week, that investors are confident that the Fed will follow its promise to decrease rate cut this year. Max Wallman, institutional investment director at Abroad in London, said, "The possibility of a recession strengthens the market. Investors are too optimistic about the Fed to cut rates, but now that has been priced, the market sees a cut this year as more realistic." While the U.S. economy is far from slowing, showing signs of a contraction, a key bond market signal of a looming recession has sent out the longest alert ever, which is the inverted yield curve. Since the early part of July 2022, the yield curve for the 2 to 10 years has been inverted, surpassing the 624 days of inverted record set in 1978. The inverted treasury yield is an old sign of the impending recession. This time, however, even after the sharp rate hike and the yield curve remains deeply inverted, the recession did not become a reality and the economy continued to surprisingly improve. Deutsche Bank analyst Jim Wright said. This was partly because consumers' high savings have provided a cushion against high borrowing costs as the economy emerges from the COVID-19 pandemic. The Fed left interest rates unchanged in Wednesday and expects to cut interest rates 3 times this year. After announcing its decision, traders believed a 71% chance of a U.S. rate cut in June, up from a 60% before the decision. Former Fed Vice President Richard Clarida said on Friday that stubbornly high inflation could prompt the Fed to take more cautious stance of cutting interest rates this year. He said his former colleagues need to be wary of the stickiness of inflation, which will hinder plans to ease the monetary policy this year. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.